Okay, we should be live. Welcome, everyone. It's a Friday, 4/24, and Jeff Bruno here. Thanks for joining us again on the Accelerators organization. Very excited to be going live here for, I think, the third time. Happy to answer questions vis-a-vis the chat. Sorry for being a little bit late. Had to, technical difficulties. So we're good to go now, and I'd love to start going over some of the questions. I'm trying to see if there's any, if I get to the chat. Okay, good. I see the chat. Excellent. So here we go. Well, there is a lot going on in the world today, everyone. We have next round of PPP that just got passed today. Trump signed it. And we have the first round where a lot of our clients have gotten approved and funded. A lot have received their funds as of this last week. So that is all good. We are very optimistic about some of this for our clients. It should help us really manage them and keep them going, at least for to live another day here. So we are actively helping them with strategies over a 2-month and an 8-month budget and so on, and projection to try to really be precise about how to manage through this, because as everyone is reading, and I would tend to agree, this is not going away. This is not a 2-month, 3-month, we're back to normal. Looks like the federal government put out all these phases of opening, and the states are following suit, and things will begin to slowly open up. But that does not mean this is over. It's going to be a changed workforce out there and a changed environment. So if you have opportunities, I've been saying this a lot, if you have opportunities to pivot, change your business model, get some revenue online, if you don't need a lot of space, you can go heavily virtual. See if you can get out of some certain leases and things. If it makes sense for your business, you have to make that decision and reevaluate your whole business. I mean, as CFOs in the modern age, this is what we really do. We're strategists, and we are looking at every angle that a business needs to do to survive and grow. And this crisis is, while it's bad, it's also opening up a lot of opportunity for the businesses who are well positioned to take advantage of it. So we, obviously we can talk through ideas. Happy to do some live if you have questions or thoughts. And that's why we're here. So again, let's start into the questions, and we'll go from there. So the first question is from Jennifer Bouchard. She asked, I own a nationwide nanny and household staffing agency. I charge each individual client a $200 registration fee and a monthly rate of 15% on the first year's annual projected salary. I've been talking to a company in Atlanta looking to help their employees find nannies because schools and daycares are closed. I have never done this before. Agencies like mine charge anywhere from 10 to 25%. How do I analyze the numbers to determine what rate I can give them and still make a profit? Well, that is a great question, Jennifer. So first off, when you say you've never done this before, does that mean that you've never done it with another company looking to help their employees? And you've just been doing it direct to people? I'm assuming that's what you mean by that. And additionally here, you are in one of the, I would probably call one of the better businesses right now to take advantage of this marketplace, because this is extended, as I was mentioning at the beginning of our conversation here, beginning of live, this is extended. So people are going to be needing nannies, and not just needing nannies necessarily full-time. They might be needing them part-time, fill-ins, so on and so forth. You could build out a huge network of scenarios here. So kudos to you. And going virtual and going through employers is a great idea as well. So let's talk about the pricing. So let's assume you're doing a $200 registration fee, plus, as you noted, 15%. So let's assume the nanny's getting $40,000 a year. I don't know, making a broad assumption there. But so you're basically getting $6,000 plus $200 a year for the year to institute this service. So my question to you is, I need to know more information about your model. So let's say you have to look at what your variable costs are, what your fixed costs are, what your volume potential is, especially with this employer. Do you have agents that help you do this, that help you source the nannies? Do you have customer service people on a fixed cost level? What is your structure that you have set up so that you can evaluate this? We'd put together a projection model, so on and so forth. But let's assume for the moment that you have to pay commissions. That would be a variable component of this to your agents. Maybe they're on W-2 and you have to pay them. Maybe there's technology used that has to ramp up with this, or fees you have to pay something online to people. I just don't know enough to determine your pricing, but I would pull that all together. I would look at, let's say it's 6,200. If your target is you want to get a 30-40% margin before you get to your fixed cost, what does that look like? And then from a volume perspective, if this employer is willing to say, yep, I will guarantee that 20 of our employees in the next year are going to use your service, I would actually think it's probably a good idea to discount that to a lower level, because I would think that an employer is probably going to want to not pay that much for an individual situation. They might be seeing it partly as a benefit. I mean, they might pass the costs on to their employees, but it's certainly something to look at. Could be a great way for you to scale. So I don't know. I'd love to talk to you more about it. I think this is a big opportunity. So happy to. Send me a note. Next submitter is Esteban Salas, S-A-L-A-S, Salas. This person is asking, hey, Jeff, I'm bringing on a new partner into my LLC. Sean has explained that we need to be cautious to be sure we set things up right in the beginning as to the roles and compensations and profits moving forward. Can you let me know your opinion on things we should be sure to look out for and also include in our operating agreement? Well, this is extremely tricky. As I mentioned on other live shows, partnerships are the hardest thing, one of the hardest things in business. I mean, outside of maybe cash flow or the lack of cash flow, partnerships are really, really difficult. So I have always historically said, if possible, there's a majority and a minority partner structure. If you can make yourself 51 and the other partner 49, or maybe even less of a minority share, that is a better scenario for the business, because decisions need to be made. So that's one thing I would highly recommend. Sometimes when partners are 50-50, they can get stuck in analysis paralysis or decision problems. So highly recommend that. So somebody is actually like the boss. The other thing is, what is that partner bringing to the table? Are they bringing capital? Are they going to be an active partner? Are they helping you with operations? Are they doing this as an investment, as a passive kind of thing? Where are you looking at for that? And structure accordingly. Are you? I think you mentioned your LLC. Yes. So do you need to look at, maybe an S corp structure for the partnership or an LLC? Those are things to consider. Because does this new partner need W-2? Do you need a W-2? I mean, yes, W-2 can be done for LLCs, but generally it's more common and under an S corp structure. You need to ask your tax accountant what's the best scenario for you, of course. But that's something to think about. And also one other thing in S corporations that a lot of people don't understand or miss is that distributions to partners are mandatory. So if your partner comes in with 30% of the company, and you guys, let's just say you make $100,000 in the business, and you distribute $100,000, you have to give $30,000 to that partner. So that is a rule of an S corporation. You need to consider other things with a partnership. Right from the beginning, obviously in your operating agreement, I would include things regarding disability and death. If they're really a key partner, obviously you want to have key man insurance in there. key person so that they can, if they bring in money or if they bring in a certain expertise that's hard to replace, the business will have that money from that insurance to cover that potential cost in that case. So a lot of things to make sure are in your operating agreement. The biggest being, when you say operating agreement, there are other components there you could do. Like, for example, you could add a buy-sell agreement to that operating agreement or you can put it in the operating agreement where you say, look, today, here's the fair market value of the company. Every year, we're going to assess whether it makes sense to, every year we'll reevaluate the market value and stamp it. So we both agree to it so that at that given year, if something were to happen, it could be just an emergency. A partner has to get out. We know what that market value is for those shares that person has come in, and you just pay out accordingly. It's a very easy way to avoid potential, unfortunately, lawsuits or other things that pop up down the road. Highly recommended. A lot of people don't do it. They think, we'll get to it. You don't necessarily have to do that day one, but I would say within the first year or so, it is definitely a good idea. So hopefully a lot of that was helpful. So as we're going through here, I see a question in the chat. Adam Drake is saying, I'm trying to put together a virtual conference since in-person conferences are canceled. Speakers will be a great draw to get attendees. Potential speakers seem to be operating as if nothing has changed, asking full price speaking fees. Not affordable for me. Ideas. That's interesting, Adam. So that's pretty amazing that those speakers are asking for full price speaking fees, considering this environment. I would say those might not be the right ones for what you're trying to do, especially in the next month or two when I'm sure they're not at events getting even more top dollar. So I'm curious on that. Maybe you can find others, and let's see what else, other ideas there. Maybe there's a way to offer them something in return. Maybe there's a construct where virtually they'll get a lead source from that, where they would otherwise get notoriety in person. That can be in lieu of some of the fee. Just not sure. But definitely look for other speakers. I'm happy to do it. Sure, let me know. So, Mick, next submitter question here is from, I'm going to totally destroy this name. I apologize again. Mikban Jinkenji. I hope I did well with that. He asked, my question is about pricing my products. So, and determining my actual cost. I sell custom tailored suits online. Very nice. So clients order online and I send to them. There are times they need to be altered and they need to be sent back to me. I don't know how to determine what this actually costs me, and I'm trying to take that into consideration when I price things on my website. Some might have to send back for altering and some won't. What would you suggest I do to analyze that? McBon, that's great that you do that. Congrats online. I think a lot of custom people are using online more and more these days. This is actually a custom shirt. So I'm a believer. So please send me some of your stuff. I'll check it out. But besides that, I mean, you got to look at your margins. You got to really put this into a financial review. I mean, you have to look at what's your material cost. So if your material cost is 20% of your pricing point, and then I'm just making things up here, and then labor, you and other tailors on your team are 30% of the cost. Typically, what I've seen with most businesses online, delivery is anywhere from sort of low end 6-7% to upwards of 20% of your cost of the product, with most being 10 to 15%. When you're shipping one way, two people. So I think if you should target a gross profit margin that make sense for your business, depending on your rent, your other fixed costs and so on that you need, and what you're trying to target for a net profit, say 15, 20%, whatever that may be. And just use that as your guide. So I would also argue that you only have labor cost with your tailoring, most likely. I mean, maybe you have some odds and ends of some material pieces, but probably very small. Probably labor is most of your cost. So I would look at lowering that cost a little bit to make it attractive on the alterations. Again, that's probably a good margin piece for you. And there's probably even more margin in there to say, well, I will cover your delivery back to you. And then they have to pay for shipping back to them, or split it or something like that. I think you want to remove the possibility that they won't ship it back to you and you miss out on that extra margin, number one. Number two, make it easy for them, right? This is the online world. You want to give them a return slip, so and boxing diagrams, or maybe just say put in the same box if they want to return it, so they don't get hit with high shipping charges, and you don't have to cover that. So you manage that process. So maybe you pay for the ship back, and then you say, here's the cost for the shipping out. So you're managing it, and it's still a cheaper scenario overall because of it's just a tailoring, and you're making more money. So I was a little sporadic there and jumping around, but I hope that was clear. So again, it's got to just go in a model. Oh, thanks, Adam. You're targeting June. Great. Offering lead services, linked to their services. Great. I love it. Sorry, Adam's speaking in chat here. I think that's great, Adam. Sean Thomas, I'm sure he'd be interested. I won't speak for Sean, but yeah, I'm certainly interested. Absolutely. Thank you, man. Love the chat. Jeff at yocfo.com. That's my email. So next question is from Gabriel Suarez. Gabriel says, hey, Jeff, what is the difference between having a CFO or having a bookkeeper or a CPA for tax returns? Gabriel, I could sum this up in a few words. I'm going to give you a few more, but basically, a CFO is your modern day equivalent of your strategic advisor, okay? Because they're tagged into the financials and they're tagged into the operations, heavy. So what a CFO does is uses that information to look forward, only forward. Now, CFOs will use historical information to give them ideas of your metrics, where you've been, what you're trying to do, what worked, what didn't work. You have to evaluate that. Are your margins too low for the industry you're in? All that stuff needs evaluation. However, it's all about being proactive and looking forward and being strategic. Now, what do I mean by strategic? I mean, accountants will make sure your stuff is aligned in the right buckets. You're having the best tax strategy, which is important, but it's not necessarily focusing on tying in your operations, tying in your sales metrics, tying in your cash flow per se on a month-to-month basis. Some accountants do that a little bit extra, but really having that true CFO on your team is aligning with the why of what you want to accomplish as well. I want to grow the business. I want to double the business in 4 years. Is that realistic? Do you have enough capital? Do we leverage now? What is the right time to leverage to get bank or other lending type of things in place? When do you have enough personal capital? Let's say banks won't lend to you. Let's say you're a sub $1 million business. A lot of businesses there struggle to get sizable loans from banks. Do you have enough personal capital? Are you willing to put $100,000 into your business? These are the discussions that need to be had with a CFO. What we do is we do it from a an outsourced level, meaning sort of a fractional kind of part-time level. So we're not replacing CFOs for businesses, at least our business type, your outsourced CFO. We're a strategy overlay on the business, the owner. So, or the partners or whatever the case may be. So we do that by keeping the costs down. We're a very reasonable retainer. And that way you're getting the strategy and the support and, the financial metrics tracking to make those decisions and bring you clarity and help you manage your cash flow and give you comfort on the direction of the business. So there are, as Michael Brawlin over here is interjecting, that he pays an interim CFO. We don't call ourselves interim, but interim is an option if you're somewhat of a larger company and you're maybe between CFOs and you do need that resource consistently internal to manage your growth, then an interim solution is good. But that's not what we do. And bookkeepers are really one more piece to your question. So we usually bring in remote bookkeepers to help our companies. We work with 3 or 4 of them, or we'll help your internal bookkeeper get to accrual accounting so the metrics are there, or just help them maneuver a little bit. If they're good, they will get there. So the bookkeeper's really doing the day-to-day plug into the numbers, getting the stuff ready. Your tax accountant's handling your taxes at year end and strategizing on some tax planning, which we incorporate as well with them. And then the perfect team is all 3 of those together. Internal bookkeeper, maybe a controller, your tax accountant, and an outsourced resource like us as a CFO or some other resource to bring that all together. We always love working with all of those components. So we are not replacing any, and we highly recommend you get the right ones in place to help your business. So hopefully that was helpful. So the next question is from Heather Brockman. Heather says, Jeff, I have 5 mobile pet grooming units. I'm trying to expand and I'm looking for suggestions on how to establish and prepare my financials so I can utilize lines of credit effectively, as well as developing terms with my vendors. As you know, it's about cash flow, and I've always worried about carrying debt. It's a mental challenge. What are some things I could really be doing to use my numbers for the most benefit as I look to expand? All right. So Heather, there's a lot here. So first of all, congrats on 5 mobile units. That's awesome. Again, you are really well positioned for this marketplace. Just as a personal note, my family and I have a corgi, and we are buying another corgi, picking him up tomorrow, a puppy, so our corgi can have a friend. So this is a great time for you to have mobile. Actually, if you're in this area, I need you. Because corgis shed like crazy. But this is a great time to have a mobile pet as well. And we've seen them starting to proliferate too. They're in our area already. So you need to outcompete other people. So there's so much strategy there, Heather. I'd love to chat with you. I think we already had a little bit of communication on Facebook. But there's so much strategy here. And as you're looking to expand, you absolutely have to have a line of credit. So I hear this a lot from business owners, especially smaller business owners. They're worried about debt. And I'm going to say this very clearly. Don't be worried about getting a credit line. Be worried about having the right advisor, like us or others, to help you manage it the right way. When you need money, banks won't lend to you. So get a credit line while you can, so you can have it if you have a downturn for a month or two, a crisis like this pops up, or you need to get another mobile truck and you need it temporarily before you flip that truck into an equipment lease structure. Whatever it may be, get a credit line. Maybe you need to hire some groomers ahead of of the demand a little bit to get them trained. I don't know. There's so many things we could talk about here, but you absolutely need a credit line, and that's used to as a positioning ahead of your revenue. So you can get to those revenues, but also keeping your projections in mind and making sure that it's realistic on what you're using the credit line for at that time. And the revenue is not 2 years behind, because, not to get too in the weeds here, but then that's a different type of loan. That's a working capital kind of construct of a loan that you would also try to go for. So as long as you're managing cash flow tightly, it's the best vehicle. So how to prepare your financials. So you need to be accrual, because a lot of people file cash. I'm sure you probably are. A lot of business owners do for tax purposes, because it usually makes the most sense for a business owner, especially starting out with a small business, to file cash. So you need to have accrual statements so that the banks truly understand your business, what your margins are. You need to explain your margins and how you effectively think that because you're at a 60% margin, every truck you add brings in $250,000 of revenue a year. I'm obviously making this up. So you do the math and you come to, here's why I need the money now, because I'm doing this, this, and this. So certainly a very easy sort of unit economic projection model you'd pull together, a quick spreadsheet to look at what it means to keep scaling. And then on top of that, how many fixed costs do you need? So you're at 5 units. At 10 units, do you need a customer service person, internal? Do you need another person to run around and service the trucks? Do you need, I don't know. There's so many things. So keep all of that in mind. Love to talk to you more though. 5 units is great. I think you're on a good path. So hope that was helpful. A couple more questions over here. Michael Bronlin says, what's the benefits of using a big firm for a CFO like Clifton Allen Larson, or someone who has their own firm? Hey, Michael, another good question. So it depends. Again, it depends, unfortunately. But Clifton, CLA, as we call them here, they have a good practice. They are well known in the consulting world with some CFO services. They are, I would argue, a good firm for a somewhat larger business. I would say you probably want to be, in the maybe 7 million, 10 million mark or up, because they can get a little costly for that. But they do have some good stuff. They're very knowledgeable, and they're a bigger firm. So I think, to answer your question specifically, I think a firm like that might be good if, one, you're growing extremely fast, or two, you're $15-20 million already, and there's a lot of maybe there's interstate things you're dealing with sales tax, which from the Wayfair judgment that went down a couple of years ago is crazy now. So you want a firm like that to manage your sales tax liability. Maybe there's questions of, do I need to file in those other states that I'm supplying to? A firm like that could help you with that. And then if there are multiple entity constructs or multiple partnerships, and you get a little complex, they might be good as well. Now, we do all that as an outsourced CFO. We help manage all that too, and we're a small firm of 7 people. So it just depends on, how complicated and how intense you're at, because just on where you're headed. But we service up to companies up to 45 million ourselves, as well, up to 40 million as well. It depends on the complexity and if our model works for them. So you just have to do your research and get the right firms for what your needs are. So Emily over here, Emily Dombert has a question. How do you know when your business is ready from using 1099 contractors to employees? Yeah, that's a very very typical question. But it's more a question for what you're doing with your business than whether you're really ready or not. Meaning, so do you want your employee? This is a hard question. So contractors are good if your business needs them. The way I look at it, contractors are good if your business needs them temporarily or part-time or something like that. I find it very hard to necessarily get a committed person, and this is not true always, but a committed person in a 1099 scenario because they have other things they're doing most likely. Maybe they're doing some other business on the side or something like that. So for them to get their full attention on your business, 24/7 is probably or can be hard in a 1099 relationship. So they also have to run their own books. They have to cost their own expenses out, things like that. They could be doing that poorly, and you don't know what their financial situation is. So they could be, who knows? They could be mismanaging that. And it could affect their work timing for you. So I think it depends on your scenario. But if you really want a core group that you can depend on to take your business from 500,000 to a million to 2.5 million, 2.5 to 5, you need a core group of people. It's most likely better to have them as W-2 just to lock them in. You can do things like a full employee agreement then with them. Subcontractor agreements don't really hold out that well, especially with an employee agreement. You could do a non-compete or a non-solicit structure for those employees. So if you have some proprietary information in your business, maybe even some IP, you can guard against them stealing that and incorporate them into your business. So I think it's the stage of your business that you want to depend on where you're going and how quickly you're going to scale, and depending on that core group. Cost-wise, I mean, it's not a huge difference unless you're offering medical and so on and so forth. But, it's just payroll tax really for you, anywhere from sort of 8.8 to 11%, depending on your unemployment scenario of cost in Pennsylvania. So it's all over the map. It needs a lot of strategic thought process. Hope that was helpful, Emily. Michael Pliley. The next question is from Michael Pliley. They asked, "Hi, Jeff. I have an LLC and do work in California." Oh, boy. No, just kidding, Mike. For a while, I've been thinking about turning my LLC into a corporation and moving it out of state, possibly Nevada. I was thinking it could save me money on business taxes because instead of having to pay the tax to be located in California, I would only pay the fee to do a business there, but be stationed somewhere else. I'm hesitant because I don't know if it will actually benefit me at all. If it doesn't, do you know of an alternative? So Michael, yes, California and New York. Those are the two states in the United States that people complain about all the time. They are the worst for businesses and for personal taxes for people in the country. Sales tax is also high in those states, and they're pretty heavily taxed. So it could. We're not tax accountants, so I wouldn't give you specific advice on this. But sure, you could maybe register in Nevada. You could, register doing business in California. For sure. I mean, my business here in Philadelphia is registered to do business in New Jersey and New York. So you could do that. I don't know specifically, not knowing your business, what taxes, or not knowing California's tax laws that well, what it would actually save you. I'm sure it would, but I don't know specifically. And it would be the fee would probably be relatively nominal to do business, I would hope, in that scenario, although again, depends on the state. For example, New York State charges an LLC fee to do business there of $1,500 a year just to do business in New York. And then it scales up over a certain level. Once you're at like $1 million of a business or $2 million in revenue, then it starts to scale as a percentage of your business. Very, very, very small percentage, but it does. So it depends on the state. California could have tough rules around that. So be careful. on what you're doing there. Obviously, this would be a good tax accountant to help you make this decision. And then, with sales tax, again, I mentioned this earlier, but with the Wayfair decision in sales tax, there's a lot of things there that are not about nexus anymore, and more about revenue in the state, and California being definitely one of those. If you have revenue in California, you have to pay sales tax, and a lot of times now you have to file corporate taxes in California on the percentage of your revenue and profits there. So they're getting you every way. Again, I'm not the expert, so please consult your tax accountant, but hopefully that was helpful. Sorry, one more thing over here is from Adam Drake to Emily. I'm sorry. Emily, another consideration is if you might be running afoul of your 1099s being de facto employees according to the Department of Labor. Yes, Adam, great point. So I think it was Obama's era where they passed stricter regs. This was bound to happen on 1099s. They moved it up to end of January filing, where it was end of February, where the 1099s have to be put a lot of pressure on small businesses to do that. And it's kind of, frankly, annoying. But Adam, you're 100% right. Department of Labor's, I would argue California is one of the most restrictive as well, is definitely clamping down on this. So to Adam's point, what historically has been going on here is that if you demand your employees work at certain hours, or your 1099 people, then they can be thought of as employees. And the Department of Labor could say, you're supposed to be paying these people W-2. And you can get an audit and get pretty hit with that. You could pay penalties and they could go back several years on that. So yeah, you got to be very cautious about that. That's a big part of navigating 1099s versus W-2. Thank you, Adam. Great point. Michael says, also thinking of switching from a partnership to an S Corp. We are scaling currently and making some investments in equipment to do disinfections. Oh, nice, Michael. I like that. Disinfections. That's great. Attack it quickly, pivot fast, because we have a client who's also as well in this area doing that. They're a hazardous waste hauler and remediation company, and so they jumped in it very fast. They're setting up cleaning crews across New Jersey and New York. So I love it. I don't know what the S Corp could do for you, but I'm sure there's an advantage there if you're considering it. So one last question here. Let's see what we have. So this question is from, sorry, I'm looking for the person's name. Oh, it looks like Lou Jackson, I believe. Lou Jackson says, when I'm looking to hire 1099 freelancers to do work, again, here's a 1099 question. Is there some sort of guide or spreadsheet I can use to determine how much I can pay and understand my numbers and margins and profits? Where does a small business owner like that go to know how much to pay people and be sure I can budget it? So, law. Here's a couple things. So we're talking about 1099s a lot today. So if you're saying 1099 freelancers, obviously they're 1099s. They can't be employees. So let's be careful how we distinguish that. And then also 1099s are a different breed than employees. So you could go to ADP. We use ADP for us and a lot of our clients. They have great resources on salary comparatives in parts of the country and different industries. You could go to other resources, your payroll company or other payroll companies or other resources out there have good salary comparisons for people. So let's say it's a $50,000 salary. So, $50,000 salary is about $24 an hour comparable. Okay. With benefits, maybe it's $26, $27 an hour from a salary level. So you can see the comparables, but then the question is, if you're doing a 1099 versus a salaried person, typically a salaried person at $25 an hour might be 30 or 35 or 40 an hour from a 1099 person. Why? Ideally, those 1099 people are specialists in that area you're looking for freelancing. Maybe it's videography, maybe it's some marketing stuff, project work, who knows. They call themselves out as specialists. So they're going to be quicker, ideally, and better than you would necessarily have an employee doing that same work. Maybe. So in that scenario, they're going to demand a premium. And, I don't know the pricing, but it could be anywhere. 25 could be 40. So you should get more for your money in that scenario. So you got to contemplate that when looking for 1099ers. However, there is a great resource that I recommend. It's called Thumbtack. Thumbtack, like thumb and tack.com. It's a great site. I used it when I started my business 7 years ago. They've been around for a while. I sent out bids to look for my logo. I got back 3 bids. It's an auction. It's a bid type process. I don't know if I picked the lowest or whatever. I thought I picked the best one. I thought he said he would be able to do it. He was phenomenal. You could do that to test run some of your projects potentially, do it on a small scale, get a feel for the market. And then you'll know some of the pricing levels of what people nationwide are charging for that. And the good thing is it's like a bidding process. So you really get sort of the competitive piece of that on Thumbtack. So I'd highly recommend trying that website to get some information and then start pricing. And again, like everybody else, you got to put a model together. What's your price? What's your cost? What are you willing to pay? How much do you need to make? Start bottom up if you have to. Start at where your profit levels are and what you have to do to get there. Hopefully that was helpful. Let's see. We have a few more questions over here. Maybe this isn't a question. It says, Ari Brown, I have my clients document this based on how they're making the decision on whether or not they should be deemed an employee or independent contractor. Yeah, there are a lot of factors. Just further discussions about that in the chat about, 1099s versus W-2. I mean, like everybody these days, if you're not totally sure, edge on the side of caution. If you can afford it, obviously, and hopefully you can afford it, edge on the side of caution and bring them in as W-2. You can never get smacked for that. And one of the other things to consider here that's been a consternation in this time frame of this environment is, this is sort of blowing up now, is the unemployment piece as well, where this $600 stipend from the government per week is disrupting payrolls for a lot of companies. So the government's paying us PPP money to bring people back on. And the weird thing is, anybody making up to $60,000, they're making more on unemployment in a lot of cases. So if they're not that critical, or they can go find another job somewhere else, they're taking off through July. I mean, they might be. And it's very hard to get those employees back. And you cannot pay them 1099 under the table to do that. That is against the unemployment construct. So as that PP money is coming out and some employers are like, come back, I got some money, we're running into that problem with our clients, which is crazy. But that, this money was so rushed out to support people, the government doesn't think of things like that. So it's hard. We're trying to navigate that. So that's most of the stuff. We are, Ari, their employees aren't wanting to come back. Ari over here in the chat, Ari Brown is stating they don't want to come back. I get it. It doesn't mean that they're, to me, they're not dedicated employees. So maybe that tells you something about the employees you hired. But in some cases, if they're making 10, 20% more, it's hard to argue against that, especially for maybe a lower paying $40,000 person, something like that. So, it's a hard scenario there. And I work with many HR professionals, in particular Marsha O'Connor in this area, who is phenomenal. She has a smaller business. I think she has maybe 20 employees. I forget. And she does great recommendations on how to work around that with current and or former employees. We are here, your outsourced CFO, Jeff at yocfo.com. we are helping clients and like this, offering up advice on a consistent basis. I'm doing another webinar, actually a live Facebook webinar on my group as well, my own internal group, doing that. So feel free. It's called Fig Score Network. I'm doing that every Wednesday at 10 for the foreseeable future to do things like this. And I'll be doing the accelerators group continually. We are really trying to help anybody out there. It's a tough world we're navigating right now, and it's a changing world. So stay on top of it. Be smart. Put up mobile dog grooming units. No, I love that idea, though. So if anybody has questions, feel free to shoot Sean an email or me, and hope this is helpful for everyone. Good luck, and stay safe. Thanks.